Well, hello everyone, and welcome back to our market report. As always, Dion Zakuski here with you. I'm the branch manager and director of Scotia Wealth here at Scotia Wealth Central Alberta. And you know what? A fair bit has happened since our last report. We've had an election here in Canada, continued political sideshows both in the States and in the UK with their whole Brexit fiasco, and, of course, an excellent start to the NHL season by my Edmonton Oilers. So with that in mind, our action today will look at the following. Will the election affect your finances? Somewhat related to this is responsible investing. What is it, and is it right for you? And as we get towards the end of 2019, what can we expect next for the markets? So we all know by now that the Liberals won a minority government in a recent federal election, and the Conservatives actually secured the most votes. For the first few days post-election, our team actually received a fair amount of calls wondering, how will this affect markets? How will this affect investing in general? What we've really seen is kind of a business as usual type scenario. It appears that a minority government, one way or another, was expected, and markets basically shrugged off the results. But what can I expect going forward, you ask? What about pipelines? What about taxes? What about the price of rice in China? Well, the key to remember is that with a minority government, it may be difficult to push a lot of policy through. And it will be interesting to see which parties side with each other to actually get any work done in Ottawa. From the Liberals' platform, though, as it relates to finances, a few things that stuck out to us were a possible rise in the personal exemption amount up to $15,000, so lower taxes for low-income earners. For first-time home buyers, an extension of the interest-free loan out there. And for any of the seniors receiving old age security, a potential bump up higher for those that are ages over 75. How will this be paid for? Well, increased taxes. Corporations will get a few their tax breaks eliminated. Any multinational tech companies operating in Canada will see new taxes tacked on. And if you're looking at buying a boat, a luxury car, or a personal aircraft that's worth over 100 grand, you better do so soon because the Liberals are looking to add a 10% luxury tax. We'll know more on this and other tax items next spring with the new federal budget. So with the federal government's continued focus on climate change, we wanted to briefly present a strategy that is becoming more popular called responsible investing. This is also known as ESG investing, which stands for environmental, social, and governance. What is it? Well, it's basically a socially conscious strategy that only includes investments where there's ethical screening in these factors of environment, social, and governance, and builds those into the process. So this may exclude certain sectors like alcohol and tobacco, weapons, and certain mining operations. The focus is to balance both social and financial returns. We're going to show you a quick graphic here that explains further. So when looking at the three categories, under environmental, companies that are involved with climate change, reducing greenhouse gas emissions, waste and pollution, and proper resource utilization. On the social side, proper labor standards and human rights, inclusion of gender and diversity, and of course protection with data and privacy. And lastly, with governance, proper executive compensation and board composition, avoidance of bribery and corruption, and transparency when it comes to shareholder rights. Now, a few years ago, responsible investing was kind of a fringe type of strategy, but it has gained quite a bit of momentum. Here in Canada, growth of RIA investing and that market has risen by 42% in the last couple years. So why consider it? Well, obviously we all want to feel good about the investments that we own and don't have companies that are damaging or corrupt. But interestingly enough, returns can be there too. And this makes sense because companies that are being efficient and have high standards of conduct tend to be well-run businesses. Well-run businesses tend to be profitable over the long term. So here at the Zakuski Group, we do keep ESG factors in mind when selecting our holdings. But if you'd like to learn more, our Global Portfolio Advisory Group here at Scotia has produced an excellent white paper that we can certainly send out to you. And we'll also look to post it on our website at www.zukgroup.com, zukgroup.com. So check it out. Now getting back to market trends, we've seen a solid recovery since the dip back in August. In the third quarter, indexes on both sides of the 49th parallel returned about 2.5%. And overall, as we're going to show you next, returns have been pretty solid since the beginning of 2019. This is global equity returns in Canadian dollars, and the blue lines show how things have been going so far this year. Towards the bottom, we see Canada and the TSX, along with the US's S&P 500 index, posting double-digit returns, along with other areas of the world as well, Australia, Germany, Brazil, and so forth. This has been because we've seen positive developments in the ongoing US-China relations and their trade, decent corporate earnings out there, along with interest rate cuts south of the border. Last week, the US Federal Reserve cut interest rates for the third time this year. And interest rates that are lower tend to be positive for the economy because both businesses and consumers can borrow cheaper. Now, interestingly enough, here in Canada, we haven't cut interest rates, and one of the only developed nations that haven't done so in 2019. So strategy-wise, yes, we're now in one of the longest expansion periods of history. Economies are still growing, but slowing down. However, with interest rates staying low and getting lower, we feel this will help to extend the move higher for the time being. Also heading on towards the end of the year, this is seasonally a strong period of investing. So at this point, we'll monitor allocations closely, but not make any major adjustments, and go by the old adage, the trend is your friend. So that's all for now. Let us know if you have any questions, and thanks for watching.